Welcome to Economic Observations. My name is Chris. Today is Thursday. It is the 11th of March, and welcome back. I am so happy to be here with you today. 712,000 more new unemployed people last week. Unbelievable. I went to see an old colleague of mine who had a stroke. He was a young guy. He's paralyzed on the right side. Anyway, I took a drive to Cape Cod. I was prompted to visit him by another colleague of ours who worked with us. She has a double master's degree. She has an MBA and she has a master's in cybersecurity. After she worked at Goldman Sachs for 10 years, she left that job and she moved on to Bank of New York. And after listening to her or talking to her after I visited with Al, she told me that she lost that job in January and she is eagerly looking for a new job with very few prospects. So it is not just COVID, folks. This is not the COVID unemployment crisis. It's a crisis. It's an economic crisis. And companies are tightening their belts as well. I mean, companies want to reduce their cost. But today we're going to talk about unemployment, the entire system, how it works, what is fair about it and what is not fair, how the various states differ from one another, and how we really need to have a federal mandate with a minimum amount paid because, folks, things are extreme. In 1935, Roosevelt signed a bill into effect offering unemployment insurance. The first payments went out in 1938, but it was an insurance policy. So uninsurance was meant to pay in during good times. So employers would pay on behalf of all their employees to a state-run trust fund. The trust fund would accumulate money, and if a recessionary period came and you had to lose your job or be furloughed.
A Louisiana worker who has just lost his job. Now, each week, the letter carrier brings Steve a check for half the normal weekly wage he used to earn. The maximum is $15, the minimum is $5, or 3/4 of his earnings. Job insurance. This is the way the state of Louisiana is doing its part in the nationwide crusade against unemployment, fear, and insecurity.
Unemployment insurance was very popular. They said for every dollar that went out in unemployment, $2 went back into the economy because people were buying it for things that they really needed. People were buying it for food, paying their rent or whatever it was. It was all coming in and going right back out. It's a recessionary blessings, they say, and one of the biggest economic aids into a recession. Last year, or almost a year ago, what became painfully clear was that unemployment was no longer there for those people that really needed it. They were overwhelmed with new cases. Some people had to call 50 times. Some people had to try to get online only for systems to crash. Some states had to go all paper because the volume was just so high. Things went terribly wrong. But folks, it wasn't just a technological problem. The recipiency rate for unemployment nationally is about 50%. Like 50% of people are entitled to unemployment insurance nationwide. That is the rate. So if 10 people are unemployed, 5 people would be entitled to unemployment. The other 5 either were fired, quit their job, looking for a job, or they were self-employed or a gig worker or something that generally don't qualify for the unemployment insurance. However, in North Carolina, the recipiency rate was 9%. And in Florida, it was a mere 11%. That means for every 10 people who lost their jobs last year, only 1 person was receiving unemployment. There is something drastically wrong with this picture. So it's not a federal program. It's 53 different systems, different policies within the states. It's 53 different insurance policies. You have one for each 50 state. DC has one, Puerto Rico has one, and the Virgin Islands have their own. So you have 53 very different mechanisms to determine eligibility and wages for unemployment. Out of those 53, Massachusetts is the highest paying state. They pay at a maximum $1,234 for unemployment if you meet the wage requirement for that amount. And on the bottom of that scale is Florida with a maximum of $275 per week. So folks, before relocating, look into these things and figure out if the state you're moving to is going to make you go hungry. It also matters what you do. Self-employed and gig workers typically don't qualify for unemployment. It's generally that full-time. So gig workers, self-employed workers don't qualify for unemployment, which is unfortunate because it is a huge percentage of the workforce. It's also overrepresented with minority workers. There were a lot of inequities built into the unemployment system. Back in the 1930s, agricultural workers and household workers were not included. And we all know for a fact that most of those jobs were held by minority workers. Even the states that pay the lowest amount have a higher number of minorities. There are a myriad of factors. And even if you do get the unemployment, it may not even be enough to live on, folks. So the question is, how did it get so crappy? Many shortcomings of the system were deliberate. Even the federal government last year recognized that our unemployment was not enough to live on. That's why they gave the extra $600 boost. That's why they continued to give the $300 boost. Because in so many states, it's just not enough to live on. And it's not 50% of the wage you were currently earning. The truth is that businesses fund the insurance trust, right? They pay the insurance or the tax to the state. In the last financial crisis, most of the states depleted their fund. There was no more money in the trust for unemployment. And they had to recoup all the funds from the last crash, right? So in 2008, 9, 10, but they were depleted. So they had to up the ante and start all over again and try and build something up. So what they should have done was raise taxes or raise that tax rate, because that's what helps fund unemployment for the next downturn. But what some states did was they cut taxes and they cut benefits and they cut eligibility and they cut the duration of time that a person can collect. You know, being unemployed, there's some kind of stigma, a condemnation attached with it, right? People look at people funny because, well, you're unemployed, right? It must have been something you did wrong. You must have been the weakest link. It must have been something that you contributed to, right? That's the kind of feeling that people get, right? And people are embarrassed to say, I lost my job or I'm unemployed, even though it was no fault of their own. That it can be done just because it can be done. So with all this stigma and condemnation, it leads to states aggressively changing policies over the past decade, right? They've just made it better for those businesses. In 2012, Tennessee made it way harder to get benefits. And they cited that many weren't eligible to receive them, right? They just made it so difficult, rejected so many people who applied, and made it difficult. You know, even in Tennessee, the governor there wanted people on unemployment to be tested for drugs. Now, how's that for a stigma, huh? Like I said, a condemnation. Unemployed people or people who lost their jobs are the, dreads of society, which is so far from the goddamn truth, it pisses me off. I know a lot of good people. Flight attendants, pilots, stock traders, bond traders, so many people. No fault of their own, but they should be drug tested. according to the governor of Tennessee. Many states enacted enormous obstacles to collecting unemployment. Nebraska requires that you apply for 5 jobs every week. They also require you attend a resume writing seminar. They want you to take a civil service exam. And 2 applications that you apply for must be suitable work. Yep. And what if there are no jobs that are for suitable work? And what if there are not 5 jobs that you can apply to? Let's face it, last year we were in a pandemic. Not a lot of jobs opening up, or even suitable jobs. And if you fail to do the requirements, well, bye-bye unemployment. Some states make it so hard and so cumbersome that oftentimes people forget to dot the I's, cross the T, or check that box, and they're booted right off of the system. They make it really hard because they don't want to pay you for losing your job through no fault of your own. That is the sad reality. There is fraud in unemployment. Generally, it's about 3.3% on average across the country. Last year, California had $11 billion in fraudulent claims. Here in Massachusetts, it was like 500 million. They recouped 252 million of it back, but it's still an awful lot of money. But there has to be systems in place to prevent the fraud without stopping people who are truly eligible and need it the most. In 2013, Michigan revamped their unemployment insurance system. Their new system flagged tens of thousands of people as fraudulent, denying them access to the very, very benefits that they needed. Later on, after review, it was learned that 70% of those flagged as fraudulent were flagged in error. And they also had a recouping system in place where if you were flagged and noted to be fraudulent, that you had to pay a penalty on your repayment of 400%. So if the state of Michigan paid you $10,000, they marked you as fraudulent, you had to pay them back $40,000. Geez, kicking the people in the knees when they're trying to get up. There needs to be a better system, folks. It's broken. But poor technology, benefit cuts, and crazy eligibility requirements, making it impossible for those that need it to have access to it. It can break a vital social program. The worst policy out of the 53 is Florida. Rick Scott in 2012 just took a hatchet to the unemployment benefits of Floridians. When he got into office, the average payment for a business was $313 a month per employee. By the time he left office, he knocked it down to $50 employee. $50. That's why the average benefit in Florida is only $275. But not only did they knock the amount down, they knocked the duration down. So while other states are providing unemployment benefits for 6 months in downtimes, Florida only gives it for 12 weeks. How's that going to help in a 1-year-long pandemic? The $50 that businesses pay in Florida is 1/5 of the national average. In 2019, Rick Scott bragged to a group of young Republicans that out of the 20 million Floridians working in Florida, only 61,000 were on unemployment. However, they made it impossible to collect unemployment. They made the eligibility requirements so difficult and so cumbersome that they hoped that just people wouldn't want to go through the process. Applicants had to take an online 45 questionnaire to apply. They also had to take an exam for reading, mathematics, and research skills. And the only way you can file was online. But we all saw how that went in 2020. It was a disaster. So much so that in the middle of a pandemic that we didn't know much about, thousands of Floridians had to go to a stadium in Miami to pick up an application form. Just one form. Thousands showed up. It was deliberate. If we can do it all over again, should there be a federal system? And if we don't fix the unemployment in this country after the past year and all the flaws that have been uncovered, we have no one to blame but ourselves. Anyway, folks, 712,000 more people on unemployment. The numbers are not really going down. Biden signed the bill, $1.9 trillion. It's a huge amount of money. Thanks so much for watching. I really appreciate you. Give this video a big like. Subscribe to the channel if you haven't. Thanks for making it all the way to the end. I'll talk to you real soon. Have a great day.